Hello traders, Nick Sheen here looking at ZScaler, more so for a quick note about charts. I get it all the time, charts don't matter, sometimes I get cussed out for it. I'm not a chartist, in fact I am a fundamental trader, and so fundamentals matter most. I don't do anything without the charts, that's the other part of it. So if you invest or trade, worse, if you trade and you don't use charts, you're leaving the edge to the other side because the other side knows a little bit more. They have the edge. And I'm going to share to you why. This week, first of all, before I forget, get your butt in the chat room. We're in it all day, bunch of traders, everybody's nice. The not nice ones are out. We discuss breakouts all the time. We have many eyes looking, and one of them was ZScaler. First of all, we caught this breakout on the way up. As soon as the trigger happened, open air, boom, delivered big profits. And I'd call me a liar if I didn't share it with other people, so it's on record. And then this week, it triggered long again off of this breakout, but I did major caveat. I said, I'm not chasing. Technically this should go to 76-ish. But there are a couple of failures just above. I should have copied and pasted the words. And this was perfect example of how the charts, they don't predict the price. They just tell me what not to do. So the breakout was there. The chart said breakout, but the eyeballs I'm looking, but the chart also said some other stuff that breakout, but there are some other things you need to look at. After hours, they're reported, and they're down in the 57-ish area. So they're down here somewhere. So they're being punished. We don't know where it's going to open, but after hours, today is 220. They just reported whatever they said. Markets hated it. So the idea is, let's see how the charts are best used. Again, they can't predict. I get that pushback all the time. Oh, bullcrap, bullshit. I'm going to say it. You couldn't tell me that you saw this coming. It's like, I didn't see the direction coming, but I knew that the setup was there, so it stops me from doing something stupid. To chase it up here was not smart because of two things, and I'm going to mark it up here, and it'll make sense. Actually, yeah, I'm going to do that. So this red line is today's close. First of all, it's an indecisive candle. They tried to rally. They fell with the market. It was a red day for the markets, unless you're a small cap. And then they closed right where they opened. So there was indecision. They didn't know what to do with it. So they're confused. And look where they got confused. That's because charts matter and markets have memory. Machines trade, right? Like 80% of all trading is done by machines. They call it AI. It's not, but they call it AI. It's just clever code. And check this out. This is today's close, right? Exactly the ledge of the half. I'm going to eyeball this. I'm going to say this whole pullback, you've heard of Fibonacci. I'm going to say this is about half. We'll check that in a second. But check this out. You believe in coincidences? To the freaking penny? Again? Yeah. And a ledge all the way here, all the way here. If I zoom out more, we'll see if it coincides with another. So this was clearly I call them pivot zones, decision-making areas. You can find them all over the charts, but some of them stick out. Why does this stick out? Because it brought this rally. That was the emphatic rejection of that bottom. Boom. So it should have been support here. They tried to hang on to it with this candle right there, but they couldn't, and then whoosh, down. So the next time they come to it, they're not going to go through it like butter. And that's what the chart would have told me. Wait, it's coming up to that point in time where they had a major crash, major accident scene, which wasn't supposed to be. So prior support may have just turned into forward resistance. Well, if they open here tomorrow, indeed it was. That doesn't mean the rally's over. They have higher lows. I'm not knocking the stock down. Nothing against its fundamentals. Higher lows. As long as they stay above that, the givens are fine. It's just a buying opportunity, and that'll be the end of this conversation there. So I'm going to close that window. I'm going to go to Fibonacci, and I'm going to tell you where this eyeball was. Look at that. This is the 50%, right? The halfway mark, the 50% retracement. You've heard that on CNBC, right? It is within inches of that same close today. It's exactly the top of this candle right here. So there are almost no coincidences. Again, I didn't know it was going to fall. That would be a complete lie. The earnings, it's just a coin flip. You can call bullshit on anybody that tells you they knew it was going to fall. Okay, we don't know it was going to fall. The reactions to earnings are coin flips. One's down, one is up. Here's one up, and one is, I can call it downish. One candle down. This was down. This was up and then down. So we don't know. The CEO won't know, and they have the papers. They have the results already in hand. We don't know what they expect. So. But I knew what not to do. I saw the trigger. The alert came into my box. I shared the alert, and I put a big caveat. I would not chase it. I am not chasing it. I'd rather chase the cues, because if it's rallying, the cues are rallying because of the fact that it has history with this level. And that's the only point of this video. People poo-poo charts. I'm not a chartist. I'm not that great at picking the exact lines, or I should say draw a crab or a bat or harmonic wave. I understand them. I can visualize them, but there are experts that can draw them perfectly. You don't need that. You could use that. That's better than nothing, but you can do it eyeball. The eyeball would tell you, wait, last time they were here, look, shit happens. So, wow, 3 cusses in one video. I've never cussed in any of you. I've cussed in one video before. You got 3 today. Special for you. So it is a place where I shouldn't do something without knowing the fact that, hey, I'm taking a big risk here. So that's the only point of this video. Now, as far as trading ZScaler, that'll be a bonus. For me, I don't know their fundamentals that well. I'll get educated real quick. All I know, it's probably an internet service of sorts that's really expensive from the fundamental. Okay, so they still lose money. Earnings per share is a little negative. Whoa! 26 times sales. That's pretty steep. So there's a lot of hopium, but that's okay because it's a growth stock. If indeed it is growing, I don't care about how cheap it is. Amazon was not cheap for a long time. Now it's down to 3.5 times its sales. That's pretty freaking cheap for a company that grows as fast as it goes. Yeah, I know somebody screaming out there, PE is 65 or whatever. Who cares? It sells at less than 4 times its total sales. So if a company came to you and said, I'm going to sell you this business, and you're going to pay me 3.5 times, 3.5 years worth of income for it. 3.5 times. So instead of buying it dollar for dollar, the only person that would sell you a business is dollar for dollar is that there's no growth. You're going to buy it, buy yourself a job. In this case, they grew, 24% the top line. So it's cheap. 3.5 times sales is cheap for a company that's growing 25 times top line. So anyway, back to the point. If it falls, I don't have a problem catching the falling knife. So I would assume there's support anywhere from 58 down to 54.70. That needs to hold. If that doesn't hold, then it starts bringing up questions. Okay, what then? But the worst case scenario, 49, is the actual point of control for this whole period of time we're looking at, which looks like almost a year. So this is where most of the buying and selling happened. In spite of all of this, did you hear that last part? This is most of the buying where buying and selling happened. This is the actual volume mass by a long shot. So all this doesn't matter as much as this. So that should be bulletproof on the way down. So if I wanted to buy the stock and I don't want to risk right away and I want the buffer zone between me buying tomorrow's dip, I would rather sell puts into inflated implied volatility. The puts are going to be screaming if it opens down big. That's the time to sell some puts. What does that mean? It's a different lesson, so hit me up on that. It's a really simple lesson, a lot safer than buying the stock. The only time it's risky is when you sell a put you can't afford to buy after the fact. Like if I don't want to buy the shares, I would never sell a naked put. If I can't afford to buy the shares, I would never sell a naked put. But if I want to buy the shares, I'd sell a naked put all day. So especially if I'm going to get paid extra for it because it's a red day. So in this case, the last statement is pretty important. This chunk of action right here is the mass of the action, just from the point of control. These two bars. So all this does not matter as much as this. Nick signing out. Oh, there's a link down below to the chat room. If not, message me, I'll answer.